On that, I'm Mike O'Neill, and I'd like to formally welcome you to the webinar this morning. We have on the line joining us, and this will be kind of helping co-host this, Rhonda Beard. Rhonda, say hi, please.
Good morning, everybody.
We're glad to have you all on. This is our second webinar. Our first webinar was held last week, and we were very pleased with the response, but we were particularly pleased with the depth and breadth of the questions. We have to build this as a webinar, but our real intent is to treat this more as a Q&A. Because of the sheer number of folks who are tuning into this webinar, we can't necessarily open the mics, but we do want to hear from you and spend as much time as we possibly can in answering your questions. For those who did not have an opportunity to participate in last week's webinar, we heard from clients and others that there was real interest to just delve right into this COVID crisis and the impact it's having on business owners and HR pros. We identified those two groups because our business, if you step back and look, that's probably the two groups we work most closely with, business owners and HR pros. And we described this as for small business, but just to kind of state up front, according to the Small Business Administration, if you have up to 500 employees, you're considered a small business. And in my line of work, 500 employees is a big business, but that probably describes the bulk of our clients, and therefore we're going to try to tailor what is it we share with you and the questions that we try to answer, targeting small business owners and HR pros. It would appear that we've got an interesting balance between the two, but our expectation is that most of the questions will come from an HR standpoint, but we will kind of delve into that. But last week, we kind of dealt with the topics of how can we make sure working from home actually works. We also kind of dealt with the topic of, goodness gracious, we're in a crisis, and we know that when crises occur, communication oftentimes suffer. What should we be doing differently? Considerable amount of time was spent where Rhonda went through a number of the legal requirements that are coming our way fast and furious. And it seems as if many of the questions center around those last week, and we anticipate that will be the case this week. And then at the end of the day, the question is as we're all dealing with this as leaders, how do we lead our companies and show compassion while at the same time keep folks motivated and productive? If you were not able to attend last week's webinar, all participants received kind of a resource listing that included the recording to last week, included the slides that we used last week, and it also included a number of very valuable resources. So if something like that would be of interest to you, drop us a note. Let us know you would like that, and we'll be happy to send that to you. In the same way, we're going to do the exact same thing with our time together today. We are recording this, and you will receive as participant not only a link to the recording and a link to the slides that we'll be showing, we will also be providing some additional resources that you'll be getting, and we hope to be able to get those out to you as early as tomorrow. With that being said, a number of you have reached out and said, we've got questions, and so with that in mind, here are the questions that we were hearing that we would be attempting to cover in our time together. One is the fact that the Small Business Administration has received a large amount of money to be used to stimulate small business. And we're going to be talking a little bit about two of the loan features that are now available to small businesses. It's very attractive, and I think if you don't know about it, this would be something well looking into it. Rhonda's going to spend time updating us on the CARES Act. In just the week since our last webinar, a lot of information has come out, and we want to try to give you the most current information that we have as of this morning. Time permitting, we're recognizing that for some on this call, you're dealing with a crisis that's not just a health crisis, it's an economic crisis. It's an economic crisis for your own business or organization. And we would simply walk through what might be the steps that companies that are dealing with that need to follow. And lastly, we want to kind of pick up on where we left off last time, because the agencies that are tasked with enforcing all these new regulations are beginning to issue guidance letters. And so Rhonda would be covering that. So that is the things that we were prepared to cover on the webinar this morning. However, if your questions come in and we see that there are questions that need to be answered on the call, those will take precedent over what we were planning to cover. So I hope those questions will be of meaning to you. And as we move into kind of the body of that, very, very quickly, I'm going to cover the Small Business Administration, these new laws and the new kind of inducements. And as many of you know, in the last few weeks, the economic stimulus plans has been rolled out in phases. The first phase was signed into law in early March. That was an $8.3 billion bill. Most of those monies went to the Department of Health and Services. It went to the CDC. It went to government agencies primarily, kind of ready them for what's coming. Phase two, which we would know as FFCRA, the Families First Coronavirus Response Act, was signed into law about a week later, and it was $183 billion, literally 10 times the first phase. And that is the stimulus bill that introduced paid sick leave, the free coronavirus testing, unemployment assistance expansion, and this emergency family leave feature. The third phase, the one that was just signed into law on the 27th of March, that's what, maybe only a week ago, is the $2+ trillion aid package known as the CARES Act, the Coronavirus Aid, Relief, and Economic Security Act. And of that, the $2 trillion, $350 billion was earmarked to be managed through the Small Business Administration. And that's just simply what I'd like to kind of pick up here. Just to let you know, they refer to this as the Economic Injury Disaster Loan. If you are an employer with 500 employees or less, and here's what's noteworthy, it's not just the for-profit, it includes nonprofit, is that those entities can borrow up to $2 million in working capital. And whereas normally there's a kind of a threshold to prove that you have credit worthiness, the first 200,000, anything below 200,000 would be approved without a personal guarantee. What's noteworthy about this loan is if you apply for the loan, though you may not be given immediate approval on that, you are going to be immediately eligible for a $10,000 cash advance. That $10,000 cash advance has the caveat that it must be spent on paid leave, maintaining your payroll, to deal with the increased costs that are due to supply chain disruptions. It even can be used to make mortgage and lease payments. So it's a very broad offering. The interest rates are highly competitive. Small business pays 3.75%, nonprofits even less. Here's what's noteworthy. Terms can be negotiated up to 30 years with the first payment deferred for a year. So here's the kind of the little bit of a string that goes with that. This would only be available to those small businesses which the Small Business Administration determines that you probably would not be able to get credit elsewhere. Otherwise, I wanted to make sure everybody on this call knew that that was available. The next thing that we would like to talk about very briefly, just to kind of get the questions coming, is what's referred to as the Paycheck Protection Program. This also is targeting those employers with 500 employees or less. They have earmarked $349 billion for this program. Low interest, 4%. And as you can see, on the slide here, up to $10 million can be borrowed by an entity. Here's what is also noteworthy. This money would be actually handled by your local or regional bank. And so SBA has basically said, we're going to give decision-making authority to local and regional banks who have relationships with the SBA. What is also noteworthy, it's not just companies and nonprofits. This Paycheck Protection Program is available to sole proprietors, to those who are self-employed, and independent contractors. Again, like the other loan, there's no personal guarantee required or collateral required. All the employer has to do is to certify that the monies received would be used to maintain payroll, make mortgage or lease payments, or even pay utilities. And that once the loan is issued, and they're pretty much promising quick turnaround time, the lenders are going to defer fees, principals, and interest for at least 6 months and up to a year. And here's the thing that makes this particularly attractive, and that is loans that are granted would be forgiven, provided that the money is spent on wages, mortgage interest, rent, or utilities. And the way they kind of have it phrased, and I'll read it verbatim, loans can be forgiven up to the amount spent by the borrower during the 8 weeks from the loan origination on. So that means that 8 weeks of payroll costs would be basically forgiven under this provision. So we don't have time to go into great detail with these two features, but if you are not aware of these two loan opportunities, let me encourage you, reach out to us, but reach out to your bank. It is specifically designed targeting those companies that may be most vulnerable during this economic downturn, small employers. And as a result, we're anticipating a lot of people express an interest in it. But for those who've gone online, the application process is streamlined. It's pretty straightforward, and it is primarily designed to infuse confidence in the economy that this too shall pass, and we just need something to kind of bridge the gap. Now, that is a mouthful just to talk about those two things, but I just want to make you aware, if you were not, of the loan availability specifically benefiting those organizations, profit and nonprofit, that have less than 500 employees. Rhonda, would you therefore pick up on our next slide, please? And again, I'm going to ask, please keep these questions coming in.
Sure, thanks, Mike. Absolutely. If you have questions, put them in the Q&A panel, and we'll answer those as we're on the phone and we're going through these topics. We just want to make sure that we get you the information that you need the most. And I'm going to go into the CARES Act, and I know a lot of people have probably gotten lots of emails and information. There's a lot of webinars out there explaining this, and what we're really attempting to do is try to summarize the information down to those things that are most critical to smaller businesses that might have a lot of questions and they're not sure where to go. So I'm going to hit kind of the high points of the CARES Act as it relates to your businesses, particularly in what you may be most concerned or interested in. If you want more detailed information, please put it in the Q&A, or if there's something that we don't hit on that you want more information on, please let us know and we'll make sure we get that to you. So quickly on the CARES Act, I think most people are probably familiar with the rebate checks that are coming for individuals. Again, this is something that you can just provide to your employees if they don't already know. And a lot of what we're trying to provide you is information so you can pass that on to your employees, to others in your organization that might be interested in these topics as well. So the rebate checks are going to be going out, it appears, in about 3 weeks, and it's going to be $1,200 per person for individuals with $75,000 a year income or less, or $2,400 per couple for those that make under $150,000. It is going to be based on your 2019 tax return if that's been filed. And if you haven't filed and had that processed yet, it'll be based on your 2018 tax return. There is a payment. It's a reduced payment to individuals that make between $75,000 and $99,000, and couples filing joint that make between $150,000 and $198,000. So there is a reduced amount available for those income levels, and then above that, there is no payment. There's also an additional $500 per dependent child, and again, based on what you filed on your tax return. And I can't find where there's any limits there. So if you have 8 children, you're going to get $500 per child. So again, just a real quick rundown on the rebate checks. Retirement plan relief, there's a number of different items in here related to employer retirement plans to try to provide more resources to employees that may be suffering financially as a result of COVID-19. All of these are optional, so they don't have to be offered by an employer, but the government is allowing you to modify your plans, your 401k and retirement plans, to include these provisions if you choose to help employees out. So the majority of these that I'm going to cover are going to be available to people who have been affected by COVID. So it's not just an across the board, this is available to everybody. So it's basically going to be if an individual has been diagnosed with COVID, they have a spouse or dependent who's been diagnosed with COVID, or they've experienced an adverse financial impact as a result of COVID, either meaning they've been laid off, they've had to be quarantined or furloughed, or had to stay home because their child's school is not in session. So anybody who has an impact financially or medically as a result of COVID is going to be eligible for these if you make the provisions in your plan. So the first one is that the 10% early withdrawal fees, penalties are being waived up to $100,000 withdrawal. And again, that's for people that are affected by COVID. So you can take an early withdrawal before age 59 and a half and not pay the 10% early withdrawal penalty. Taxes on withdrawals that are taken out this year can be spread over 3 years. So an individual that takes a withdrawal from a plan is not going to have to pay tax on the full amount this year. They can spread that tax over the next 3 years. And they also have the ability to redeposit their distributions taken out this year back into the plan within 3 years. So if something changes next year, they have that money available and they want it to go back into their 401k or retirement plan, that can be done as well. And then the loan availability maximums have also been increased. So normal loan maximums in a retirement plan are 50% of your vested balance or $50,000, and that's been doubled. So employers can make the provisions in their plan to allow 100% of the employee's vested balance or up to $100,000. And then outstanding people that have existing loans, if they have outstanding loan balances, they can delay their loan repayments up to December 31st for a year. So any existing loans, again, has to be applied through the plan, has to be COVID related, but employees can defer their loan payments on existing loans between March 27th and December 31st. And then the other factor that is not related to COVID is that minimum distribution requirements are being waived for everyone this year. So retirement plans require minimum distributions at age 70 and a half. And those are being waived, and that's not COVID related. That's just waived for anybody. They're not requiring the minimum distributions this year. So that's a quick rundown on the retirement plan provisions. And again, those are, with the exception of the minimum distribution requirements being waived, all of those are subject to the employer deciding to put those provisions in their plan. Not required, but available to make those changes if you choose to for your employees. The next one I want to cover is the expanded unemployment benefits. So I think everybody knows that there is a $600 supplemental unemployment benefit that's being put in place, and it's being funded through the CARES Act, and that funding is being transferred to the different state unemployment agencies to cover the $600 payment. So the $600 supplement is available between April 1st and July 31st for those that are suffering a job loss. And after July 31st, it's not going to be available, but it is for up to 4 months. And it is on top of the normal state unemployment benefits. So one question that we received was, for instance, I know in the state of Tennessee, the maximum unemployment benefit is $275 a week. Employees can also get another $600 a week if they are not working due to a shutdown or a cutback. So that's $875 a week, or roughly 21 something an hour. And some employers have said, well, my employees don't even make that much. So are they going to be able to collect unemployment in an amount that's more than what they would normally make? And yes, they are. So that is a benefit that's out there, and it is pretty rich. It is for a 4-month period, but again, keep in mind, it's only for employees who are out of work due to the employer either cutting back, laying off, closing, etc. So it's not something employees can elect if the employer still has work for them to do. The Act has also eliminated the first week of unemployment being a wait week, so unemployment benefits will be available from day one of unemployment. And then most states have a 26-week maximum for unemployment, and this Act has expanded that to 39 weeks. So one thing to keep in mind, though, is if you look at some of the state Department of Labor websites, there's not a lot of information out there yet. Most of them say we're still waiting for additional information from the federal funding and from the Federal CARES Act on how this is all going to work. But it appears as though employees are not going to have to submit a separate unemployment claim for the $600. So if they've submitted a claim for unemployment and it is related to, businesses being shut down or work being reduced right now, they're going to be eligible for it, and it should not be a separate unemployment claim. So there's still a lot on the state level that needs to be clarified. But I did see on the Tennessee Department of Labor website this morning that it said for, well, let me get into the individual, the self-employed and independent contractors. So it did say go ahead and apply, but they may not know when this is going to be funded exactly at the state level. So another element is the pandemic unemployment assistance, which provides unemployment for self-employed workers, independent contractors, freelancers, and et cetera, that normally don't qualify for unemployment benefits. And they're going to be eligible to receive half of the state's average weekly unemployment benefit plus the $600 a week. And again, there's not a lot of detail at the state level yet, but some of the state Department of Labor websites are saying if you're not working, go ahead and apply. And they just don't know when it's going to be paid or when it's going to be funded. So there is additional unemployment benefits available for some individuals that may not have had them in the past. Okay, high deductible health plans, HSAs and FSAs, there's some provisions for additional benefit eligibility and payment here. So typically with a high deductible health plan, most high deductible health plans are set up to not provide any benefit coverage until a deductible has been met, with the exception of preventative health. But with the new CARES Act, there is a provision that high deductible health plans that are paired with an HSA will cover telehealth services before the plan deductible is met. So the deductible does not have to be met for telehealth to be covered or for any type of COVID testing to be covered. There may still be copays. If there are copays as part of the health plan, an individual may still have to pay their copay, but they're not going to have to meet the deductible before that's covered. There's also some provisions for over-the-counter medications to now be eligible for reimbursement through HSAs and FSAs. Things like pain relievers, cold and flu medications, and any type of COVID-related treatment can also be reimbursed through FSAs and HSAs without a prescription. And that has been, the FSA, HSA over-the-counter medication provision has been made retro back to January 1st, and there's no expiration date on that. They expect that will be, at this point, an indefinite provision in those plans. All right, and then the last element of CARES that I want to cover real quick are the business tax credits that are available to small employers. And the first one, and we'll talk more about the FFCRA, the sick leave and expanded family leave in a minute, but the full amount of wages and benefits paid to employees on paid sick leave or the expanded family leave can be taken as a business tax credit. I'll explain how that works in a minute. Another tax credit that employers can take right now is the 6.2% employer FICA tax. So they can defer those payroll taxes and pay half of that deferral by the end of 2021 and half of that deferral by the end of 2022. So that's another payroll tax relief element of the CARES Act right now. And then the third one is that if you're paying employees who are not working and you're continuing to keep them on the payroll and pay them, a company can get a refund of half of the amount of wages for each employee up to a maximum of a $5,000 credit for each employee. So to be eligible for that credit, your operations have to have been either fully or partially suspended due to a shutdown order, or you have to show a 50% loss compared to the same quarter last year. So if you meet one of those two provisions, you can take a tax credit for half of an employee's wages up to a $5,000 credit per employee. And keep in mind though, Mike talked a little bit about the small business loan and paycheck protection loans. If you take this tax credit, you're not eligible for the paycheck protection loan. So you can't take the tax credit for the wages if the company is shut down, and then also apply for the loan for payroll relief. So you have one or the other. You still are eligible for the tax credit for the PSL and the EFMLEA wages paid for people on leave, but not for the wages paid to retaining idle employees on the payroll. The way that tax credit works is that you basically claim it as a credit against your federal income tax withholding or your Social Security Medicare tax withholding. So you can reduce your tax payments in the quarter that you are taking the credit for the payroll taxes for these reasons. And if your payroll taxes are not large enough to be able to take the full credit off of that, then you can apply for reimbursement. And they are working really quickly to try to get the reimbursements done as quickly as possible. We'll also talk about documentation required as we get into the PSL and the EFMLA Leave Act, because you are going to be required to have documentation of the leave pay for PSL and EFMLEA for your tax credit. So that's, again, quick rundown of some elements of the CARES Act that may be of interest to you. And again, if there are additional questions, please make sure and put them in the Q&A box.
Rhonda, thank you. We've got some questions that have come in while you were speaking. I want to ask you to take a look at that because I think you may be best to answer some of those. The first one comes from an anonymous attendee, so we're not quite sure who that is. So what I'd invite you to do is, if we don't get to that question, send us a note. Let us know who that is so we can follow up with you directly. And again, the whole purpose of this was to have you less hearing us and more of us hearing from you and us learning from each other. And the only way we can do that is to hear from you through your questions. So please keep them coming. For the benefit of those who are on this call, just let you know, we have representation from a wide variety of industries. We have representation from healthcare, finance. We have representation from the government. We have representation from the nonprofit sector, higher education. We've got manufacturing represented on this webinar as participants, both small and large. Small being less than 500 employees, and we have some Fortune 500 representatives on the webinar. We have folks who spend most of their time in an R&D area. We've got folks who are specialists in marketing, and we have folks on this call who are in the retail and wholesale space. So you can see a wide variety of organizations are represented just on the participants of this call. But what we are also hearing is that all of us, regardless of the industry in which we're coming from, looked at this COVID crisis first as kind of a health threat. And we're all scrambling. What are we going to do with the health threat? But if you listen to what Rhonda just went through in some detail, now we as leaders are having to deal with all of the requirements we have as employers. And it's almost dizzying, all those possibilities. But now, because this is beginning to affect the economy, businesses are really questioning, what do we do now? And I hope this does not apply to you, but I suspect it does touch every one of us on this webinar. And that is, what do we do, particularly if we're a small business, to conquer this crisis? And from a conquering standpoint, we're operating on the premise, and I hope this is very much what you hear, is we're dealing with something very serious. It's a health threat, it's an economic threat, it's a societal threat. But if we continue to do what we're advised to do, this threat will pass. We have to act smart. But what it also means is, as business owners, which we have on this call, you've got a business to run. And the question is, what should we be doing? How should we be prioritizing? So I went to my friends at the Small Business Administration and friends with the organization known as the Small Business Development Center that's part of the University of Georgia. By the way, if you did not know, Rhonda and I are speaking to you from two different states. I'm speaking to you from Georgia. Rhonda's speaking to you from Tennessee. Our clients span multiple states, and there are participants on this call for outside of Tennessee and in Georgia, but the experts on these kinds of things have been just slammed. Small businesses are worried. What do we do? And so I went back and asked, what should we be advising our clients? And so I wanted to share with you very briefly some things that we've learned from them. And that is, when you're running the business, we know this, we hear it, but cash really is king. And your ability to manage cash. This applies to small businesses and large businesses, but you have to kind of, when things are tight, you have to prioritize who you're going to pay first. And because things are tight, you've got to be real on top of your financial records. Don't just rely on your accountant to tell you how your business is doing. Be intimate with what's going on. Needless to say, if you've got situations that are beginning to really cost, that are really out of line, you have to address those things. And because we all rely on customers, at least most of us on this call rely on customers, those customers are also, as we know, experiencing financial hardship. Some of those customers may not necessarily be as creditworthy as they once were. And for those, you have to make a difficult choice. Continue doing business with them, but add the caveat, you have to get paid in advance or perhaps COD. We actually have finance represented on this call, and folks who lend businesses money understand what's going on, but you may have to reach out to your bankers and ask for, can they give you some better terms, at least while we're dealing with this crisis? They want to keep your business, but you may have to go and ask. If you don't ask, they may not necessarily volunteer. But if you make a commitment, regardless, this is true universally, but now in this time, if you're making a commitment to those you do business with and you make a promise, we're advised this is more the reason why you've got to keep those promises. That's particularly true if you've made a commitment with state or federal agencies. If you don't honor your commitments, they've got the ability to immediately freeze your assets, and you don't want that. That will shut you down in no time flat. Most businesses have a line of credit, but it needs to be looked at. You don't want to tap into it, but you actually kind of want that. And sadly, in times like this, temptation arises. And so if you don't have good cash management systems, you open up the possibility of people putting their hand in the cookie jar. Embezzlement oftentimes picks up in times like this. And so if you don't have a process by which checks are being signed by more than one person, if you've not been examining your payroll records to make sure that you're only paying those people who you're supposed to be paying, this serves as a great chance to kind of do a quick checkup. So cash management is what they suggest that you start with. Looking at your pricing structure and how you contain cost is the second category they suggest that you focus on. If you've got an expense that's not necessary, namely if it's not contributing to revenue, give serious consideration to those expenses. Look at your pricing. Look at the value you're adding. And in times like this, there is a tendency for business owners to think, well, only thing I can do, only thing I should do is slash my prices. Well, we're advised and we're passing this along to you. Don't cut your prices in panic mode, but be mindful of what you're doing for your clients and the value that you're actually adding. For those who are renting or leasing, you may have to go back to your landlord and ask for some concessions there. And because you are buying from others, vendors, if you will, you may need to revisit with them on seeing if you can negotiate discounts. The third category they suggest you look at, the formal term for that is supply chain management, and that is odds are you're buying from, you're converting, and you're selling goods and or services. If you have inventory, stay real on top of it. If you notice in your inventory that things are moving slower than normal, then obviously liquidate those as much as you possibly can. But if you have some items and or services that seem to be in hot demand now, add more. This is the time to do so. And needless to say, if you can buy from vendors who can deliver when you need it just in time, that's obviously encouraged. In the same way that you are going to be encouraged to stay in touch with your customers, that also means that you are encouraged to stay in touch with your suppliers. Keep them in the loop. You have a relationship there that you don't want to be jeopardized by this. And so supply chain management is that third category. And the last one is marketing. We actually have representation on this call from some folks, our friends at Sparkative are participating in this webinar. Sparkative is a marketing firm, and they've kind of stressed to us is that if you are selling in times like this is not the time to be selling your services. This is a time to be adding value, to be staying in touch of your customers. It is the right time to step back and reassess your marketing strategy. This is not the time to shut it down. It is a time to kind of say, how can we market most appropriately and go after the niche that we are best suited for. And if you have customers, there's no better time just to stay in regular contact with them. They're dealing with what you're dealing with, and don't go hide underneath the rock. Reach out to them. We are, and that's hopefully what we're trying to accomplish by this webinar, we got to find ways that we can help each other. And that even includes helping your customers. They really do appreciate that. But when you're looking at your marketing setup too, it also step back and look at how have you marketed. And this is a great opportunity to kind of revisit your online presence, your website, to look at how you are set up from a social media standpoint. And if you haven't gone back and revisited it, look at the technology that has come online and been embraced in a matter of a couple of weeks. Zoom. A lot of folks who are on this call had never been on a Zoom call before today. That's a classic example of organizations and businesses embracing technology and trying to figure out how to make it work for them. Our webinar last week, we learned from that. We hope to get better. And based on the feedback you give us, our intent is to continue to offer this as a webinar series. So I want to kind of share with you, those are the four main categories that the folks at the Small Business Administration says that you need to be looking at. This is the prioritization that they suggest that you kind of focus on. And needless to say, a number of you on this call may have some specific questions. You're invited to ask those in the Q&A pane. This may be a good time for me to remind you, I don't think we made this very clear, but we know that the nature of some of the issues you're dealing with may be a bit too complex to ask in the form of a Q&A. And for that reason, anybody who is registered for this call will be sent a link as follow-up, and that link would be one in which if you click it, it'll give you an opportunity, if you so choose, to schedule one-on-one time with either Rhonda or me at no cost. Our intent is to be available to you to try to answer your questions, and if we cannot, to try to find the answers that you're dealing with. So we'll come back to that in just a few minutes. Rhonda, I don't know if you had a chance to look at the Q&A. We've had a couple of them, particularly that dealt with unemployment. Do you want to cover those now?
Sure, I will. So one question is, will an employee receive the $600 if they currently do not qualify for unemployment due to not enough wages? And again, some of that is not real clear, but there is language that does say that part-time employees and workers who have not had long enough work history to qualify in the past may be qualified to receive half of the state's average unemployment benefit plus the $600. So it sounds like there's a very good chance that even people that may have not had good qualifying reasons under standard unemployment benefit requirements can get partial unemployment plus the $600. Again, keep in mind that's going to be if the employee is out of work. And then the next question is the employer responsible to pay unemployment if the employee decides not to work, even though the business is allowed to continue to operate? So I would say no. So, the employee can file for unemployment through the state if they choose to, but in most cases, they're not going to be eligible for for unemployment benefits if there is work available for them and they've just chosen not to go to work. So if there's work and they can either come to work or telework and still receive wages and they choose not to, I'm quite certain they're not going to be eligible for unemployment. And then employer's responsibility if a commission-only employee's pay is reduced due to lack of work. Again, a commission employee would have to provide wage statements to be able to show what they've made in past weeks in order to determine what unemployment they'd be eligible for. But yes, they may be eligible for unemployment if their wages have been reduced. It depends on how much they're making now. So if they're still making more than what the average state unemployment benefit is, they may not be eligible for unemployment. But I would still encourage people to apply. There may be partial unemployment available depending on what they're making.
All right, thank you, Rhonda. Again, one of our participants asked a question, and it starts, we're a small nonprofit business. That appears to be a bit of a detailed question, and we would like to give you a thought-through response to that. If you haven't already, drop us a note so we know who you are, and we can follow up with you after this webinar and hopefully get that question answered for you. Rhonda, do you want to pick up on some of the things that have changed even since last week regarding the FFCRA?
Sure, and I'll say that some of them have even changed since yesterday. So wow. There's continuing updates on the FFCRA, the Families First Coronavirus Relief Act, which includes two different components. There's paid sick leave and there's the FMLA expansion, emergency FMLA expansion. So there's two components to this. We did talk about some of the basics of it last week when it came out. I'll cover that real quickly and then want to talk about a couple of specific additions in information we've gotten in the last few days. So again, this is for employers under 500 employees. And there are some exceptions for companies with under 50 employees. There is an exception that you can apply for if by providing this, the viability of the business is jeopardized financially. And there's also an exception for employers under 25 employees that they don't necessarily need to provide job protection for people taking the emergency family leave. So other employers are still going to be obligated to protect an employee's job for up to 12 weeks if they take any type of FMLA, including the emergency FMLA expansion. And for those employers under 50, the only exception is to the FMLA. You are still going to need to provide the paid sick leave, the 80 hours of paid sick leave we'll talk about in a minute. So the exception for under 50 is the FMLA if you can show that it jeopardizes the viability of the business. And then effective yesterday, employers are required to display posters. And if you don't have those posters, that's something we can send out to you as well. They are available on the Department of Labor website. Many of you may have gotten links, but you are required to post information on the PSL and the EFMLEA. And then we also suggest handout or emailing to employees who may not be at work to make sure that it gets into everybody's hands. Okay, the paid sick leave, real quickly, just in terms of how it works. This is available to all employees, regardless of how long they've worked. So day one of employment, eligible for 80 hours of paid sick leave. There are 6 reasons that an employee can take paid sick leave, and I'm not going to go into those in detail, other than it's basically if they've been diagnosed with COVID, have been told to quarantine because they have symptoms of COVID, are caring for somebody who has COVID, need to be off of work due to their children's childcare or school being closed, or have other related COVID type health issues that they believe they need to stay home for. So 80 hours of paid sick leave for part-time people, that is reduced to based on their average hours that they work. In terms of payment, it's going to depend on the reason. It's either 2/3 of their pay or full pay. And again, we've got documentation on that we can send out to you with more of that detail that we did cover last week as well. Wanted to talk a little bit more about intermittent leave, and there's been a little more clarification on that. So for the paid sick leave, it is to be taken in full day increments unless someone is telecommuting. So if someone is off due to being diagnosed or having symptoms of COVID, you certainly don't want them in the workplace part-time and taking intermittent sick leave part-time. So if they're in the workplace, it has to be taken in full day increments, and they can only return to work when they've either used all of their paid sick leave or have a qualifying, or have, if they've used all of their paid sick leave or no longer have a qualifying reason to take the paid sick leave, meaning, their symptoms are gone, they've been released. So if someone does take off of work for a sick related reason, definitely want to make sure that they're clear of that before they return. If someone is telecommuting, they can, for instance, take part of their day as sick time and part of their day as work time, if it works out and if the employer agrees to that, or take a couple of days a week as sick time and the other days as work time. So intermittent leave is available only if the individual is telecommuting and taking the sick leave. Now, documentation that's required, this actually just came out with more details yesterday. And what's interesting is the IRS has requirements that they're asking employers to put together as far as documentation, so that you'll have that when applying for the tax credit for this. But it's a little bit contradictory to what the CDC is saying. So the CDC is saying, don't ask your healthcare provider for documentation. Employers cannot do that. The healthcare providers are too busy right now. They don't have time to provide documentation for everybody who's sick or has COVID-related symptoms. So there's been a little bit of a compromise on that, and the documentation requirements say that you do need to get the employee's name, the dates the leave is requested, the COVID-related reason that they're requesting paid sick time, and a statement that they can't work or telework because of that reason. They also need to provide, if they've been quarantined, they need to provide the healthcare provider's name that has made the quarantine recommendation or has treated them. So they're not requiring a doctor's slip per se, but at least the information on the name of the healthcare provider that the employee or the employee's family member has treated with that has said that they either have been diagnosed or they have symptoms and requiring quarantine. As far as family leave expansion, employees are eligible after they've been on your payroll for 30 days. Again, the pay requirements are listed there. They can take the first 2 weeks of family leave as their paid sick leave and get paid for that if they choose to. And then there's another 10 weeks of paid leave available. The reason for the family medical leave is only if an employee is unable to work due to their child's school or daycare being closed. So that's the only reason that someone can take the emergency family leave expansion. And it is for 12 weeks in a 12-month period. And if they've already taken family leave for some other reason during the year, then that amount will be deducted and they can only take a total of 12 weeks of standard family leave, intermittent, any other type of emergency family leave. So 12 weeks total family leave, including the new Expansion Act. Intermittent leave can be taken for FMLA as well. And this is not necessarily just for people telecommuting. So people can, if you're still working, if you have people working, they can take intermittent leave, and it can be partial days. It can be a certain number of days per week. They can come into work, they can telecommute, and so forth. So this can be taken intermittently. There was a question that came up about exempt employees, and can exempt employees take intermittent FMLA? And they can. Now, the question related to that, though, is typically for an exempt employee to take any type of time off, if they've performed any work at all during a pay week, they have to get their full salary for that week. So the question comes up, you know, what happens if someone wants to take 4 hours of work and 4 hours of intermittent FMLA, because that intermittent FMLA is only going to be at 2/3 pay. So the information I've gotten so far, this has not been printed or stated or posted clearly anywhere, but what I did get from the Wage and Hour Division is it's okay to do that. So you can split up an exempt employee's pay if they are taking the intermittent FMLA and pay them 2/3 pay for their FMLA time and full pay for the hours they're working. So we'll get more information and details out on that. And then documentation requirements, again, name and age of the child being cared for, the name of the school that's closed or is unavailable to provide care, a statement representing that no other suitable person is available to care for the child during the period of the requested leave, and for a child that's older than 14, a statement that special circumstances exist requiring the employee to be home to care for that child. So those last two elements are pretty new. We hadn't had any guidance on that before, but that again is just the employee making those statements and signing a statement that those are in fact their situation. One other question that came up: if a business closes due to lack of work, can employees take their paid sick leave? And they cannot. Remember, there's 6 reasons that they can take that paid sick leave, and if a business closes, that would be unemployment eligibility, but not paid sick leave eligibility.
We are quickly approaching the top of the hour. Rhonda, thank you. We want to be respectful of your time. We said that we would run from 10 to 11, but let me just make sure you do know. Debbie Rector, by the way, thank you. We now know that those questions are from you. We do appreciate that. And Christina, thank you for that link. Just to kind of give you an idea of what you can expect as a follow-up. This is our second webinar. The number of participants mushroomed between last week to this week by about 50%. So we're very pleased, and we hope this is meeting needs. What I would invite you to be looking for is we will be preparing kind of a follow-up. And in this follow-up, you will have our contact information. You're going to have our attempt to answer any questions that may have come up in writing. You're also going to be receiving a link to the recording, a link to the PowerPoints that we show, and then a couple of things that were mentioned. Rhonda mentioned the poster. We'll include a link to the poster, and we may even throw in a few more links. And a number of you asked for a link to last week's webinar. We may in fact just include that in what goes out on Friday. I hope you'll find that a valuable tool. The last thing I want to just kind of remind you is these have been very good questions, but the offer stands. If any of you have questions that you would like to ask on a one-on-one basis, we're happy to provide up to a 2-hour consultation. And what we're going to pretty much commit to you, this is not a sales pitch for our services. So you can call and be assured of that. But we simply want to be available to you, answer questions, and offer this as a way to get back. We are about out of the time that we set aside. On behalf of Rhonda and me, thank you for your willingness to give us an hour of your time. We hope it's been of meaning to you. If it is, then what we invite you is, based on the feedback we're getting, we will probably have yet another webinar about this time next week. And if that is of interest to you, be on the lookout. We'll send out links to that as well. So again, thank you very much for your time. I wish you all the very, very best in these trying times, and encourage you, stay safe and stay strong. Goodbye, everybody.
Thanks, everyone. Goodbye.